Have you ever wondered what type of life insurance, if any, you need? Keep listening to hear our take on things. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Brittne Halford.
And I'm Dr. Lisha Taylor.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time.
Hey, Lisha, one of the most important financial tasks we do as doctors is protect ourselves, which means getting the right insurance. I recall purchasing my insurance policy just a few days before I graduated from residency. What was your experience?
So I got my insurance when I graduated from medical school right before I started residency. I actually called a few agents, but I had the best service from Pradeep Audho at PKA Insurance Group. He was super responsive and personable. Unlike some of the other agents, Pradeep actually got me quotes from all the major companies and actually took the time to explain the nuances in each of their policies. What I loved most is that he wasn't just this way for me. Whenever I would send one of my friends to him, he would not only speak to them, but he'd also let them know where to go or who to contact if there were better options or discounts available.
At PKA Insurance Group, Pradeep Audho and Matthew Peterson are independent brokers focusing on disability and life insurance. They excel in securing coverage for physicians and other medical professionals. Discounts on disability insurance can range from 10 to 40% depending on your situation. And there is now an A-plus rated carrier offering up to $10 million of life insurance without lapse. If you are very healthy with limited to no medical issues, approval is likely in 5 minutes. Reach out to PKA Insurance to discuss your disability or life insurance needs at www.pkainsurance.com or call 1-800-258-1018.
Hey, money best friend, we want to hear from you.
That's right. We need to know a little about you to improve this podcast and ensure we give you the best content possible.
Are you a wealth-minded doctor like us navigating the challenges of money and medicine, or are you in a totally different field?
Are you in your early 30s like me or a bit older like Brittne?
Hey, I'm not that old. If you wouldn't mind, head over to the podcast show notes, click the link for the survey, and kindly fill out this super short 6-question survey.
Based on your answers, we will tailor the podcast to fit your needs. Thanks in advance for filling it out, and don't forget to leave a review.
We appreciate you.
All right, Lisha. So here in Boston, I've been dealing with so much. So much life is lifing over here. Hot water heaters breaking, us going on vacation, and helping my friend and her father navigate the healthcare system. I just need to take a couple of deep breaths. And so I want to know, I always live vicariously through your life. So let me know and let the audience know, let the people know what's going on in your world.
Yeah, so actually have a bit of happy news to share. My sister-in-law had her baby, and so I am now an auntie times 3. I have a brand new nephew. He is the cutest thing. I'm so excited. If you can't see me, which is basically everybody listening to this, my face is beaming, and it's been a long road. So, not to put all her business out here, but her water broke really, really early in the pregnancy, around like 21-ish weeks. And so we went from like having discussions about, potentially having a baby that didn't survive to her needing to be basically hospitalized for 3 straight months in the hospital. So going from
Wow.
like her working every day as a physician to basically her spending all night, all day, basically every day in the hospital and not being allowed to leave, and like the toll that that took on her, on my brother, on our entire family, and like us having to basically chip in to help my nephew who was already born, and just like navigating things and like spending so much time and so many days in the hospital and just visiting them, and just really it was like a lot. And so to see her beat the odds by far, and baby was born, I think 32 weeks, which is still early. But like, I mean, going from like water breaking at like 22 weeks or 21 weeks to like baby being born in 32 weeks, something along those lines. It was just great. I mean, the odds were not in her favor, and she killed him. And just like my nephew came out so plump. People were like, what? He's a like, it's just, he's got all these rolls. And we're like, okay, you were feeding this baby. And just like to hear him cry, to snap all these
Aw.
photos. He's the cutest thing. And of course, she's thrilled to actually go home. And
Oh my gosh,
so
I can only imagine.
so it's just like a very happy time in our family, and we're just so excited. Baby's still in the NICU right now, but he is like doing so well. Like the only reason he's still there is just because like somebody who is a neonatologist is probably gonna hear what I say and be like, I have so many corrections, Leisha. But I think the gist is that babies can't really bottle feed enough or breastfeed enough to like sustain life until they're like 34 weeks. And so basically he's in the NICU because they're having to feed him through, like the tube. And I think this week we're trying like bottle feeds. And if he can do that, we'll scale up bottle feeds and that sort of thing. And like if he could feed on his own, they're sending baby home. And so it's just like, oh my gosh, like this is like a full circle moment for us. We're so excited. I'm excited. And so just so happy for my sister-in-law, my brother. So happy news. Happy news.
Yes. Oh, I love to hear that. I remember when you shared that with me off the podcast and, just whenever we hear less than favorable news, I think just our mind fills with worry. And even sometimes, even if it's not a person that I know, being a mother, I feel that emotion. And so I'm so grateful that everything turned out and that everybody is happy and healthy. And I can't wait to see pictures. So you'll have to
Yes.
send the pictures. Yes. I love babies. Every time I see like a pregnant lady or a baby, it just causes me to think about having another child.
And then Kevin, your husband, is like, absolutely not, under no circumstances. Or no, no, no. I remember you saying he actually wants more kids. So you're the holdup. So then he gets his hopes up that you
Yeah.
actually do want a third. And then you bring
Yeah.
him back to reality.
It's the fourth trimester. Like the pregnancy, I love the pregnancy. I love breastfeeding, but the sleep deprivation is horrendous for me.
Wait, you love
So
breastfeeding? Not to get too technical or get all up in your business, but I have heard
yeah,
the opposite from my friends who have breastfed.
I breastfed both of my children for 15 months.
Oh my
And
gosh. Super mom.
yes.
What the heck?
And just like they get so snuggly and they love you so much, and the release of the oxytocin, and you have all of the endorphins flowing, and it is great. The one thing that I hated about breastfeeding was working and having to pump and trying to pump on a
Mm.
schedule. I think the system is getting better about supporting nursing moms, but it's
Yeah.
still not as it should be. And I can recall having my breast pumps in and having to run to a code. For those of you who are not in healthcare, a code blue is basically when someone has lost their pulse and we are starting to initiate CPR. And I remember running to a code and having like the breast pumps in there and having to do CPR. And like, okay, this is not ideal, but this is what I'm doing as a working mom and
But
as
did
a
you save the
physician. And so
life? Did you save the life?
yeah, the patient was fine. The patient was fine. You got Dr. Halpert in the building.
With the breast pumps, I'm visualizing this, like you running down the hallway with your breast pumps in and like pumping on somebody's chest. Like this is actually quite a sight in my mind right now. I'm like, actually, and you saved the life? Like what? Super doctor over here?
So yes, I'm so happy to hear about your sister. Thank you for sharing that good news. And I cannot wait to see the pictures of this beautiful baby. All right, let's talk about maybe some money mishaps. I have a few to share.
Okay, go
Lisha, I
ahead.
don't know about you. Like, which one do I share on this episode? So, one money mishap that we are navigating right now is this whole home purchase process. And we've talked a lot about purchasing a home and some of the things that might not be disclosed to you. And we are at this point boiling water. And my kids are like, Mommy, I want a shower. We're going to have a shower bath with a tub of water that I've boiled and mixed with some of the cold water from the shower. But the money mishap is, I know there are a lot of things that you just don't know when you purchase a home. I wish that I would have advocated a little bit more because of the circumstance in which we purchased this home and we had an extended close, that I got a repeat inspection or hired a plumber or somebody else to come out to take a look to make sure that the home was in the same condition when the initial inspector came out. Because our initial inspector inspected the home in February. We closed on the home in June and moved in the middle of June. So all of those months in which something can happen, and we know as a homeowner or even as a renter, like things just break when they want to. But if I had done the inspection closer to the time of closing, then maybe the inspector would have caught some of these things and saved us thousands of dollars.
Man, I tell you, when you tell me about your stories with this home, I know that you all are happy to be in this home, but I'm just like, man, oh man. And to be honest, it's kind of made me nervous. Like, the more I hear you talk about the things you have to buy or fix in that home, the more I'm like, you know what? My apartment looks great. I'm happy here. I'm good. It's so funny because you were talking about how you're having to pay for repairs. Before we started recording, my garbage disposal in my kitchen, like under the kitchen sink, had stopped working. And I just like put in a maintenance request. An hour later, the maintenance guy knocked on the door, came on in while we were, planning stuff. He fixed my garbage disposal. He left. He didn't send me a bill. He left. And I was like, that's
Mhm.
kind of nice. It's quick, it's efficient, and most importantly, it's free. So it's one of those things where you got to keep in mind that when you are renting, that is the maximum amount you're going to pay each month, your rent, versus when you are homeowner, your mortgage is oftentimes the least amount you've got to pay. And you've got to account for repairs and
Mhm.
property taxes and homeowners insurance and all those other things. So I'm sorry that you're dealing with that. And now your hot water heater went out, you're boiling water to take a shower. Like, are we living in the 1950s? Like, what's happening here? I'm so sorry. Hopefully, y'all
Yeah.
can get that fixed soon.
We hopefully will. I'm just going to drop some numbers. I'm not going to drop the company name, but one company told me it was 11 grand to fix this hot water system. And I said, well, how much of that is supplies and how much of that is labor? Because when I look online, it looks like the hot water heater costs about 3 grand. Maybe, you add on some pipes and some other supplies that are needed, maybe an additional grand. So, okay, that's 4 grand. So what you're telling me is that 7 grand is labor. Now I know that plumbers get paid a good amount per hour and they clearly have an expertise that many of us do not. I'm like, oh my gosh, if it takes you 7 hours to fix a sink, that's $1,000 an hour. That seems unreasonable. I was like, okay, I'm going to shop this. And we're waiting for some additional quotes. But that number, 11 grand, we have an emergency fund. Yes, it has more than 11 grand in it, but I just don't want to pay that much for a hot water heater replacement. So we've been boiling water until I figure it out.
So if you're listening to this episode and you yourself are a plumber or you know a plumber, please let them know to email us at wealthmindedmd@gmail.com. And maybe Brittne can have some other quotes for her plumber. Because you know what, Brittne, our fantastic podcast audience has helped me out. Do you remember when I was talking about how my car broke down and how I didn't know how to jump off my car? I don't know much
Mhm.
about cars. Somebody emailed us. Her name, Danny, appreciate you. You're number one in my book. She was like, Lisha, you should know how to do this. Here's a thing from Amazon that you can get that's going to help you out. And she like sent me the Amazon link. It's like this one device that will help you like jump off your car. Like it has jumper cables and you can like charge stuff and you can like increase the air pressure in your tires. And I feel like a whole handy woman. So Danny, thank you for sending that to me. I did order it. And I did get a discount on Amazon Prime. So I appreciate you. Thank you for listening to me rant about that. I'm so glad I talked about it on the podcast because my life is enhanced now because of you, Danny. And so this is a word to y'all out here listening to us. If you hear us talk about something and you can help out our lives in any way, please send us an email. Let us know. I do check those emails. And so I will respond and say thank you. So appreciate you, Danny. Thank you. You're a real one.
Oh, that's so sweet. I truly love our audience, and maybe we need to have like a recommended list from all of our audience members. That is so sweet. My mother tried to send a plumber from Michigan. She's like, well, we could buy the ticket, and mom, I'll figure this
Honestly, it
out.
might
It's
be
okay.
cheaper than paying 11 grand for that. So, I mean,
My
but
gosh.
you all live in Boston. There should be plenty of it's not like a small city. Like,
Oh, of course. There are plenty of plumbers. It's just, do I want to pay the price point that they are requesting? I have another guy who's coming out tomorrow, so I'll figure it out. I mean, ultimately, if like it's 11 grand for the service, it's 11 grand for the service, if that's what everybody is saying. But I did not want to go in just because I'm experiencing this pain and do something in haste and regret it on the back end without doing my research because I had already paid somebody 850 to solve the problem and they did not solve the problem. So now I need to negotiate with them to get a refund. And I just wish that I would have taken a little bit of time to do more due diligence and shop it for myself. So we're learning here on this podcast always.
well, I hope you get that fixed soon. I'm sorry about that.
Yeah, it'll be fine.
As physicians, one of the most important things that we can do is make sure that we secure our income. because a lot of our financial plans are contingent on our high doctor income. One of the things that you will need to do is make sure that you get long-term disability insurance.
Now, Pradeep and his team at PKA Insurance Group have a reputation for putting people over profits and always doing what's best. Do not hesitate to email PKA Insurance and his team today.
They will help you get the insurance you need with the service you deserve.
Now we're going to talk about our wealthy insights with Pradeep Audho. And if you have not listened to our disability insurance episode, let me tell you, after you finish this one, go back because Pradeep, he gave me a lot of knowledge of things that I already knew, some reminders, some things that I didn't know. And so I am certain that you will learn something by listening to that disability insurance episode. Pradeep, thank you so much for coming back and sharing your wisdom with us. So today we are actually going to talk about life insurance. Tell us, Pradeep, who do you think needs life insurance?
In the simplest way, you died tomorrow. Are there people who would suffer financially? No, that's the simplest way. But obviously, it's a little bit more complicated in terms of, if you have a business partner and you own a company together, what happens if one partner dies, especially if there are loans involved. Also, if you're starting a practice or buying a practice, the banks would require that you have life insurance to protect the loan in case you pass away. But for the most part, in terms of families, it's pretty much if you have dependents. Now, one of the things, because I work with a lot of immigrant folks, a lot of them support their families back home, wherever back home is. But even here, more and more people are supporting their parents. So you might not have kids, but you might have parents who are counting on you. I have a situation right now where I have a client, his parents pretty much took out a home equity line of credit to put him through med school. So now it's payback time. He wanted to make sure that in case something happened to him, he had at least paid off their home equity. I mean, he'll be paying it off gradually, but if he passed away, a life policy would be a quick way to take care of that. Yeah, I think for the most part, if you have dependents, then you do need to make sure you have adequate coverage.
All right, I'll be honest and transparent. I currently do not have my own life insurance policy, at least not an individual one. I think I get some through my job. And that's because I am not married and I do not have kids. And if I were to pass away, I know my family would be really sad, or at least I hope they would be, but they would not be financially bankrupt. They don't depend on me for money. And so I don't have my own life insurance policy. But when I get married, when I have kids, I will get one, or I might even do it, right before I get married or right before I get pregnant. But one of the things that I get asked a lot is, Lisha, I am married, or Lisha, I do have kids. How much life insurance do I need? And what type of life insurance should I get? And so I was wondering if maybe you could tackle that. Like, how much, when you're counseling folks or doctors, how do you help them figure out how much insurance they need and the kind of insurance that maybe they should look into?
Typically, the recommended amount with most insurance companies or industry standard, it's 10 to 15 times your salary. Now, that's just a guideline. Keep in mind, it's a guideline coming from a group of people selling insurance. So I generally tell people 10 to 15 times is a good number. Let's see what the premium looks like. And if it's affordable and you want to do that, then let's do that, or we could scale it back. Obviously, if you're making $1 million, 10 to 15 times could be overkill. So it depends on what you want to leave when you pass away. If you have little kids, we also factor in, okay, do you want to fund college, or you just want to get them to 18? And I've been doing this 20 years, and shockingly, I've seen some crazy responses from people about their kids. And these are honest responses. They're like, once I get this kid to 18, they're an adult. I don't need to be providing life insurance. So I'm just going to get a 20-year term. And I typically recommend term insurance because that's the way to go for most people. So there's about 3 or 4 types of life insurance. So there's term life, which is the cheapest form of life insurance. So you were going to buy a specific death benefit and the premium is fixed for a specific period of time. So if the policy says 20-year term for $1 million, what that 20-year means is the price is locked in for 20 years. In year 21, depending on the policy or the company, some policies come to an end, some continue at a higher price if you choose to keep it. Most people walk away because it's going to be, if you're 45 and you're buying a 20-year term, when that thing ends at 65, you're that much closer to saying bye-bye to the world. So your cost is going to be significantly higher if you want to maintain that. I generally tell people, if you have kids, at least have coverage till they're 25 years old. It protects them through possibly advanced schooling beyond college. And after that, hopefully you have accumulated enough cash to not need any coverage beyond that. So again, term insurance, least expensive, most economical way to have coverage. And it gives you coverage for your working years. So from when you start working till 65, 70 in that range. Now, the most we've had has been a 30-year term, but there are now some companies that offer 35-year term and a 40-year. The premium is significantly higher on those because you're more likely to use them towards the end there. So term being the least expensive, that's what most people buy. That's what I typically recommend. I am not a fan of the permanent products. So the permanent products would be things like whole life, universal life. There's something called variable universal life. So essentially whole life is the most expensive. I have clients who say, I don't care when I die. I need to make sure there's a policy there for my kids or my whoever I'm leaving it to. There's also a subsection of people who feel like term insurance is a waste of money. Their thought process is, if I give you 10 cents, I need my 10 cents back. Whatever I give you, I should get back. Because the idea of outliving the term and letting that money go is not something they find appealing. So I spend a lot of my time convincing those people not to waste their money. I've seen some crazy things where there are people who got suckered into a whole life policy by a company that I'm not going to name, but you know who they are. That's their bread and butter, convincing doctors. I had a physician couple recently. They graduated in June of last year. Combined between the two of them, they make 700. Somehow, one of these companies got a hold of them and convinced them to commit $90,000 per year to whole life insurance. And the numbers looked awesome because they have this nice glossy presentation and they're showing you, well, if you put this much in, this is how much you're going to have. It's basically a glorified CD at a bank. They had only been paying into it for about 3 months, so we were able to salvage it. Basically, they walked away, they lost some money, but not significant because they were paying monthly, so they didn't lose their full 90,000. But right after they did it, they started reaching out to different brokers saying, hey, do we do the right thing? We feel like this was a mistake. It's that buyer's remorse thing. So I ran the numbers and I showed them they could have got a lot more coverage for not even a quarter, less than a quarter of that money. So they ended up going with large term policies and they bailed on the whole life. I've seen some people who were too far in and it's too late. They can't get out because it doesn't make sense to get out because the dividends are starting to eclipse the premium. And that usually happens around year 2025. It's like a mortgage. You have to think of it like a mortgage. Everyone's got a different opinion on this. I am not a fan of whole life. I am sure someone from Northwestern or Guardian or Mass Mutual will tell you how awesome it is. And they'll show you all kinds of presentations on, if you put this much in, you're going to take this much out when you turn 70 and all of that. I just feel, and from personal experience, the money you would put into a whole life policy, if you just stick that into a Fidelity index fund or a Vanguard index fund or something, you're probably better off in the long haul. Yeah, you're not going to have life insurance when you're 90, but I don't know how important that is. Now, if you're super wealthy, whole life could be beneficial in terms of helping you pay estate taxes, but there are not too many doctors that are worth 24 million that I work with. Maybe later in life, but I think most people, if you plan well and you invest well, and I'm not an investment person. I ditched my investment license. So this is not investment advice. So I'm not recommending Fidelity or Vanguard or anything. I'm just saying those are the names out there. I feel, especially when you're now starting out, you'd be better off just getting term policy and not worrying about cash value build up and all these types of other policies.
Yeah. So, Brittne and I are both really staunch advocates of term life insurance, and our audience has probably just heard us kind of talk about it, but we're really staunch advocates for term life insurance. But we also recognize that there may be a few nuanced situations in which some people may want whole life insurance or may need it. For example, as you mentioned, if you're going to have an estate tax problem, you mentioned a lot of doctors do not have a net worth of over $24 million. And so they don't have an estate tax problem. But if somebody listening to this episode is extremely wealthy, then maybe that's something they want to consider for an estate tax issue. Sometimes if people have like a disabled child, they want to make sure that that disabled child is taken care of. And so I think that there may be some nuanced situations where people could benefit from whole life insurance. But I think that for the most part, Brittne and I agree with you, and that term life insurance might be the way to go. Brittne, I know you had a question that you wanted to ask.
Yeah, Lisha, thank you for that. One of the things that I think about is that there are people who have already purchased a whole life insurance, as you mentioned. And I'm sure that couple was so grateful to you, but they were just 3 months in. I know that there are some people who have been paying in for a few years, and I've heard that you break even around 10 to 12 years. So, what should people do? I know that this is a nuanced question, but if they have purchased whole life insurance and they're just a few years in, and now they realize that it's a mistake, what advice would you give to them versus someone who's maybe 10 or 12 years in? How does that advice differ?
You'd want to crunch the numbers. You get a statement every year from the company, and it'll show you what your cash value looks like. And then it'll show you how many more years you have to keep paying to get to an equivalent amount of where the cash value is equivalent to the premium. And 10 to 12 break even is very generous. It's more like 17 to 20, but it depends on how the policy is structured. So there are some policies called a 10 pay whole life where you pay it off in 10 years, but the premiums are massive. So I generally would have people look at, okay, how far along are you? So that the illustrations will also have a surrender value. So you'll have to make that decision if you have to keep paying for 10 more years to get to that certain break even point. But if you cancel the policy and took the surrender value and you just chalk it up to stupid mistake, I'm not doing this again, and just put your money into something fixed, whatever you want to do with the money, I think you'll just have to look at the numbers and see if it makes sense to walk away or keep paying. I mean, if you're close to break even, I generally tell people just suck it up. It was your baby, you own it. Keep going. Sometimes it doesn't make sense to walk away.
Yeah, I agree with you. And I think just to reiterate that point, if you're listening to this and you have whole life insurance because you truly believe that it's a great product or someone has convinced you of such, or you know that you need it for whatever reason, one of the things that I would encourage you to do is get what's called an in-force illustration. And that's what Pradeep is talking about. That is the name of the document that your insurance company that you bought the whole life insurance policy from will demonstrate different things. And one of the things that will be mentioned is not only the details of your policy, what's your death benefit and all of that. But when you're talking about permanent life insurance, you're accumulating what's called a cash value as you pay in those premiums. And the in-force illustration will let you know what is the value, how much cash value is actually in your policy. And then what Pradeep is talking about and what Brittne is referring to when we talk about breaking even is that oftentimes, when you're first paying into that whole life insurance policy or that permanent life insurance policy, your returns are negative. Meaning if you were to surrender the policy or if you were to give up the policy, if you were to cancel the policy, you wouldn't actually get anything back based on what you paid in, or the amount that you get back in cash value is much less than what you even put into it. And that's why Pradeep is like, hey, he doesn't really like whole life insurance because for a lot of people, whole life insurance is way more expensive than term, and you would have been better off saving that money. So paying for the cheaper term life insurance policy and investing the difference. But if you're somebody, as Brittne stated, who already purchased a whole life insurance policy, you're like, Lisha and Brittne, look, that ship has sailed. I'm already in this boat. How do I maneuver my way out of it? Step one, ask your insurance company for what's called an in-force illustration. That will allow us and yourself to see what is the cash value of the life insurance policy. If you were to surrender or get rid of the policy today, are there any fees that would be associated with that? How much cash value can you get back? That will help make the decision of, should you just stick with it or should you cancel it? Or should you turn it into annuity or do some of these other things with it? And so, our goal with the podcast today isn't necessarily to teach you all about whole life insurance or to go through all the nitty gritty, but just to let you know, hey, if someone depends on your money, if someone depends on your income, you probably need some sort of life insurance. And we recommend if you're starting from scratch, you'll probably be fine with term. But if you are somebody who needs whole life insurance for whatever reason, or maybe realize at this current moment that you maybe bought the wrong type of policy, don't worry, don't panic. Just ask for an in-force illustration so we can make a decision now on should you keep the policy or not. Because I think what we're trying to reiterate is that the decision on whether or not you should get a policy is different from the decision on whether or not you should keep a policy. And so if you don't have one, you need to ask yourself, do I need one? And make sure you get the right kind. And if you already have one, one, do you have the right kind? And if not, okay, let me figure out what I should do next. And so I think that's really helpful. Pradeep, for those of us who maybe don't have our own life insurance policy or are starting from scratch, do you have any guidance as to how much a term life insurance policy will cost? I know you mentioned that's the kind of life insurance that you like. That's the more affordable kind. You have any idea, like if you have a physician and they, I don't know, make $200,000 a year and they want a $2 million term policy, do you have any idea of like how much that would cost? I know it depends, but just giving some estimates or ballparks here, I think could be helpful.
Yeah, it's super cheap. And also, we talked about in the previous podcast about disability and female rates. On life insurance, it's the opposite. Women pay less than men because they live longer. Depending on age, it's going to depend on medical history. But I would say you could probably get like a $2 million 30-year term policy for maybe $700-800 per year.
That's really cheap.
Actually, let me quickly pull.
You gonna run the numbers right here, right now. Okay.
Pradeep, I actually need a consultation, so I'm going to pause. We're going to segue.
And we're gonna help Brittne out. Brittne, how much you need, girl? Pradeep's gonna run these numbers right now. Crunch the numbers. Let's just use Brittne. How much you need, girl? Well, I don't want to put Brittany's business out there, but you let us know.
I agree, Lisha. I don't want to put all of my business out there, but Pradeep, that number, I just want to share this with the audience that I've been adjusting our life insurance recently. And there was a company that we went with that was recommended by a colleague, and a broker sold us some life insurance. We need a bit more life insurance because we really didn't update it since we're fresh out of residency before we had any children. And I just got a quote, and it was so much more than what Pradeep is saying. And I know that it depends on your medical history and your age. And so I just want to encourage people. And I want to ask you, Lisha, your thoughts on this, and Pradeep also. Even though you don't have any dependents, given that life insurance is based upon your health and your age, the cost of it, would it be prudent for someone to maybe get a policy early on, even if they don't currently have dependents, but they desire to have children or get married? Would it be prudent to get that policy earlier on just to save money and to kind of lock in that good rate? So that's one question. And then Pradeep, yeah, I definitely want you to shop our life insurance because I mean, that sounds like $2,000 worth of savings.
Right. I don't know how old you are. You don't have to tell me, but I just ran a quote for a 40-year-old female in Massachusetts, assuming
She's not yet 40, but she's nodding her head because she's knocking on 40's door.
Okay, so a 40-year-old female, super preferred category. That's the top class.
Top class for Brittne.
Penn Mutual is the cheapest, $875 for a $2 million 20-year term.
Hey, Brittne, I think that sounds pretty decent.
That sounds decent, Pradeep. I'm going to actually come to you.
So I'm kind of on the fence on what the right answer is because I'm not sure. I generally tell people in that situation, whatever you're comfortable with, if it's not going to mess up your financial numbers in terms of budget and all that, if you feel confident that, maybe you're going to definitely want to have kids, maybe you could buy it. Is it necessary? No, because no one's counting on your income. I have clients who come to me and they're not looking for advice. They're just telling me what they want. They buy term life because they have a family history of certain things and they don't want to wait to get like diabetes or something, then apply because the price is going to be higher depending on what you have. And also family history does impact your rates. So for example, with Penn Mutual that I just mentioned, if you have a family, and family is defined as your mom, your dad, brother, sister, no one else. If any of those folks have a history of cancer, diabetes, or heart disease prior to age 60, you probably will not get the top rating class with Penn Mutual. But there are other companies like Principal that are going to be a little bit more flexible. So that's where working with an independent person again is better because we could shop you. So I have software. If you're a customer and you reach out, I will send a one-page document and I'll ask you all these questions. I'll take that, input it into the software, and the software will tell me instantly, these are the companies I would consider you for the preferred plus category. These are the companies that would classify you as preferred because of family history. So based on that, we know where we need to go based on your individual circumstance. But yeah, in terms of should you buy, there's no right answer on that one. I sell the stuff and yeah, I want you to buy, but I'm not going to tell you should because if you don't really need it, I'll tell you don't need it. But ultimately, it's on you.
Yeah. I want to piggyback on that, Brittne. Like my stance is that I prioritize the things that I absolutely need before I prioritize the things that I don't need. And so If you're someone listening to this and you're like me, where you're maybe not partnered and you don't have kids, so no one depends on your income, then I think you ask yourself, like, do I have other financial priorities that I need to put above this? And for me, the answer is yes, right? I want to build up my emergency fund. You and I talked about how, like, I like to have a lot more money in an emergency fund than maybe other people do. I want to save to buy a house. I want to save to buy a new car. I have all other financial priorities at this point. And so buying a term life insurance when I don't need it isn't top of mind. But like I said, if I were engaged and I knew I was about to get married, if I was planning a pregnancy, then I would totally get it. So I think there are certain like sweet spots to consider it. But at this point, I think for me, I have other financial priorities. But like if I were in your position, right, then I would try to make sure that I definitely had something. And I think that segues into like one of my final questions, which is probably one of the things that I've heard is that, you don't need life insurance for your whole life. You only need it during the time period in which you're building wealth. And for a lot of people, that's their working years. Once you have retired, for most people, if you were to pass away, then you can leave your family the money that's in your retirement accounts or leave your family the money that you've accumulated during your working years. But some people feel like, hey, Lisha, I'm saving a lot during my working years and I may be financially independent way before I hit retirement age. And I don't want to take out a term 30-year life insurance policy because I may be financially independent before then. In other words, I may not need a term life insurance for the next 30 years. Or, my life insurance needs may decrease as I get older, right? As I start to accumulate more wealth and my children get older and leave the house, maybe I don't need as much life insurance. So maybe my life insurance needs are greatest when I'm younger, and then they decrease slowly over time. I'm saying this to say that there's been this new concept of what's called laddering policies. So instead of buying like a 30-year term policy for, I don't know, $2 million, maybe you buy a 30-year policy for 1 million and a 20-year policy for 1 million. So that like at the 20-year mark, certain policies fall off. So it allows you to save a little bit more money and be a little bit more nuanced with how much you get. Hopefully that made sense and I didn't get too into the weeds, but Pradeep, I wondered if you could speak to that and like who might be a good candidate for laddering policies like that? And when should someone just get like a regular 20 or 30-year standard policy?
I would say we use laddering a lot. Most clients come to us looking
Okay.
for a ladder. A lot of people who come to me, they have a financial advisor who's doing all their planning and everything else, but the financial advisor doesn't sell anything. They're simply telling them what they're recommending. We usually ask, how old are your kids? So we sort of structure it around the kids. It's harder to ladder if you have no kids. Every so often I get a single person who's buying coverage, but they want a 10-year and a 20-year and a 30-year. I'm like, why? Because there is no logic behind it, but their thought process is by the time 20-year rolls around, I'll be rolling in cash. There's a company called Banner Life. They allow you to buy a ladder in one policy. So normally when you buy a policy, every policy has a policy fee. By doing the ladder on one policy, you could have two policies essentially, but it's in one. So you're only getting one policy fee. So the price is cheaper. Instead of buying multiple, like a 20 and a 30-year term, you could buy a 30-year term with a 20-year term ladder that sits on that. Combined, you would have 2 million for the first 20 years. At the end of the 20th year, the rider drops off and you just have 1 million. Laddering is pretty popular and a lot of people structure it based on the age of their kids. It works better if your kids are 5 years apart. If they're like 1, 2, 3, it's harder. But a lot of people still just go, you know what? I just want a 30-year. If by the time 20 years roll around and I'm filthy rich and I don't need this life insurance, just walk away. It's not a mortgage. You're not obligated to keep paying your premium. I find 20 a bit aggravating. What I'm seeing, and I've been doing this for 20 years, people that are buying these smaller period policies, they're approaching that policy, it's coming to an end. They're now older. They now have a medical problem. And now they want to get a new 20-year, a new 10-year, and they're now going to pay more. They could have just locked it in for 30 years and be done. And a 30-year term is not that expensive compared to the 20. It is more expensive, obviously, but the alternative would be going with the 20 now. And then 15 years down the road, you call me up and say, hey, I have diabetes. I need to get more coverage. Okay, I'll get you coverage, but it's going to cost you a lot more. So I feel like I'm more of a person that I like the sure bets. So I generally advise people go with the sure thing. 30-year, lock it in, be done. If in 20 years you don't need it, just walk away.
Well, Pradeep, I still have a lot of questions. So I'm going to set up the consultation. And audience, if you too still have a lot of questions after hearing all the wisdom that we've discussed during this podcast episode, then feel free to set up a consultation with Pradeep Audho and his team. I can just say personally, the quotes that he just offered are much lower than what
was recently shopped, and I'm so grateful that there's been a delay because of life that I have not enrolled in this new policy. So please check out Pradeep Auto at PKA Insurance Group. And Pradeep, again, thank you for joining us on this podcast. And we cannot wait to connect with you again and to share space. And we just appreciate everything that you've given us and given the audience today.
And now it is time for our fun money. Lisha, I know you're always traveling. Like, that's what you're doing with money, right? You're always traveling. So where are you going? Or and maybe I'm completely off target here and you have something else to share with our audience.
No, you're on target. You're on target. So by the time this episode drops, I think it will be like early-ish August or maybe mid-August. And so I'll have just come back from the Olympics. So I think I mentioned that I'm going to the Olympics. Remember, I have a travel bucket list and an experience bucket list. And one of the experiences that I want to have is to go cheer on Team USA at the Olympics. And it's in Paris. So why not? And I mentioned, I think before that, two of my co-residents when I was in training were really close. And I had briefly mentioned that I wanted to go to the Olympics. And they mentioned they wanted to go to Paris. And we said, let's make it work. And so one of the fun things that I'm doing with money, besides like going to Paris, is it is their first time in Paris. I have been to Paris before. And so they want to do some touristy things and some of the Olympic things. And so we've been spending money on both of those. So we bought tickets to see like the gold medal game for women's basketball. I'm a huge women's basketball fan. We also just bought Olympic tickets for track and field. Like I thought these tickets were sold out months ago. I thought there was no way I was going to find tickets, but we just got tickets to see like the finals of the 4x1 and like the 400 meters. And so I'm excited to like cheer on Team USA, and the track. Like it's going to be fun. And then, of course, in terms of touristy things, like I want them to obviously see the Eiffel Tower. And so we got tickets to like go up to the summit, which is the tallest part of the Eiffel Tower. And then I just made reservations for us to eat lunch at the Eiffel Tower restaurant. So that should be fun. It'll be like overlooking the city. We're going to go to the Louvre Museum. I don't even know if I'm saying that right, where the Mona Lisa is. And then we're going to take like a river cruise around the city. So I'm like arranging all of this stuff and they're so excited. Like they love it. They're like, ooh, Lisha's going to plan it. And all I have to do is just like Venmo her money. This is the best thing ever. I'm like, what do you guys think about this? And you're like, sounds good. Sounds good. And I'm like, man, that must be nice. Like, I wish somebody else was planning this and I didn't have to put in as much thought, but I am being excited about this trip nonetheless. And so hopefully I will have fun memories to share when we come back. But yeah, that's what I'm doing. I'm spending money on Olympic tickets and touristy stuff in Paris.
Very, very nice. So I'm just going to ask this right here on the podcast. Whenever I go out of town, Brooke, KJ, he really doesn't care, but Brooke always wants something. And she's like, Mommy, can you bring me back a surprise? So Lisha, I have a request. Can I Venmo you some money? And can you please bring my kids something back from the Olympics? For Brooke, she loves to run. She loves to run. I've mentioned this a thousand times. And we're not going to Michigan to run the 10-mile race because I have not been training. But during that race, she runs the teddy bear trot. And so she's a little bit.
Wait, teddy bear trot? How cute.
Yeah.
Hold on a second. That's so cute. The teddy bear trot?
Yeah, it's so cute because they have a big teddy bear who runs with the kids.
How long is the race? It's for kids?
It's for kids. It's for kids. I think it's 400 meters. It's a decent distance. Some parents run with their kids. Some parents push the kids in the stroller, but Brooke runs the entire time.
Aw, the teddy bear trot.
And so if you go to the track and field event and you see something, a t-shirt or a shoe or something like that for track and field, or it does anything from the Olympics, please bring something back for my Brooke and for KJ.
Yes. Oh my gosh. Do me a favor. Help me help you. Send me a text. Like text me. I'm going to the finals for track and field is like on that. I want to say it's on that Friday. Maybe it's whatever the Friday is, whether that's August 8th or August 9th. So shoot me a text. Help me help you. And then, oh my gosh, that's so cute. And also the teddy bear trot, like whoever came up with that name, kudos. It's so cute. But yes, I can do that for you and Brooke.
Thank you.
Mm-hmm.
So that's going to be my fun money. I'm going to send some money to Lisha for her to buy something for Brooke. Now, in all seriousness, we are going on a trip this weekend. And so we're going to New Hampshire. I don't actually know the city of New Hampshire, but it's this place called Storyland. It's like Disney spinoff. But we're also spent a decent amount of money on the hotel. And this hotel has a pool. It has a water slide. And like the room, we kind of got this upgraded room because my nephew has been staying with us for the past 2 months here in Boston. So he's going with us. And it's really important that each person has their own space because my nephew, although he's 20, he and my son KJ, who's 3, they're like frenemies. So they love each other. They play together. But on occasion, KJ will like just walk by and like slap my nephew. And then my nephew would like lock him in the pantry. And so there's always this like back and forth between them. And I'm like, okay, you guys got to stop. I need you to separate. So I'm just grateful that we spent a decent amount of money on this hotel room that will allow for everybody to have their own individual spaces. And I can separate my 3-year-old and my 20-year-old.
So hold on. Is it like a suite? Like, it has like rooms that you can
Yeah.
like close off?
Yeah. Yeah.
Whoa. This sounds like a luxury hotel. Are you like a big hotel person? Like, do you splurge when it comes to hotels?
I typically don't. My husband does because we have different perspectives on what travel and relaxation looks like. So for me, I love exploring. When we went to Hawaii, I didn't run so much by myself in India, but definitely in Thailand. I explore. So we have one excursion that we do together. Then my husband goes back to the hotel. He orders room service and I tell him like, hey, I'm going to go for a run or hey, I'm going to go and explore this street and give him a time in which I'm going to return because oftentimes, our cell phones don't work. And he stays back and he relaxes and he goes to sleep or he watches a movie in the hotel and I go and explore. So I don't spend a lot of money on hotels because for me, when I'm traveling, I don't want to be in a hotel. I want to be out and about meeting the people and doing the things, but he loves to relax.
Okay. Gotcha. And so this is like a trip where you guys can do some exploring, but also you're going to have a nice hotel for him.
Exactly. Always a nice hotel for him.
Well, you're going to have to let us know how that is. I know that it's very common for folks like you who live in the Northeast to like vacation in the Northeast in the summer or to like go somewhere, New Hampshire, the Hamptons, Martha's Vineyard. Like people I know that's a thing that people do in the summertime, but I have not personally done that. And so let me know how that is. Maybe I need to go do some domestic travel and go explore that area with you. So let me know how that is.
I definitely will. We like to travel abroad too, but just with this home purchase and everything, we decided to, keep it drivable and make it affordable. And I think that's one of the things that I love about money and how you use money. And when you really focus on joy, you can cultivate experiences that foster joy that are very expensive. Or you can cultivate experiences that are affordable. Or you could be like Lisha and leverage all these credit card points and make it luxury and affordable, which I like as well.
Exactly that. Well, thank you all for listening so much this week. We can't wait to come back to you all next week.
Hello, and thank you for listening to our podcast. And because of that, we have something for you, our Wealthy Mind Starter Kit.
Have you ever thought to yourself, I wish I could be better with money? Do you want to start investing and saving for retirement, but keep delaying because you don't know where to start? Our Wealthy Mind Starter Kit is here to help.
This guide will teach you what you didn't learn in your training so you can stop being confused about money and start taking what we call wealthy-minded action.
We'll help you become a master of your finances and simplify investing so you can get started today. Take control of your financial future by downloading your free copy of the Wealthy Mind Starter Kit now and start building the wealth you deserve.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittne Halford, and her friend, Dr. Lisha Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, So use your best judgment, chat with a tax professional, and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.
One of the most important things you can do is ensure you have long-term disability insurance. Long-term disability insurance secures your income if the unexpected happens and you are unable to work due to medical illness, chronic conditions, or an accident.
Unfortunately, all insurance agents aren't created equal. Some of them are so focused on making a sale that they fail to reveal certain necessary information, tell you about discounts available, or clearly explain the process. Pradeep Audho and his team at PKA Insurance Group are different. They have a reputation of putting people over profits and always doing what's best.
If you need life insurance or disability insurance, reach out to Pradeep and his team today. They will help you get the insurance you need with the service you deserve.